From the street, a car wash looks like one of the simplest businesses in America. Cash in, cars out, minimal staff. That perception has convinced thousands of investors to personally guarantee loans exceeding $5 million. What most of them never see are the hidden economics, the equipment failures, utility bills rivaling restaurants, and the single competitor move that can flip a $250,000 profit into a $50,000 annual loss. Online car washes are pitched as the ultimate passive income play. The promise is simple: set up the site, let the equipment do the work, and collect steady cash flow with barely any staff. Social media feeds are full of stories about first-time buyers stepping into ownership, drawn by the sight of a line of cars and the sound of coins dropping into machines. The operation looks clean, efficient, and nearly automatic, a business that seems to run itself while the owner is free to pursue other ventures. For many aspiring investors, the appeal lies in the visible simplicity: a steady stream of vehicles, minimal payroll, and transactions that appear straightforward. This surface-level order creates the impression that risk is just as low as the labor count. But the reality is shaped by what's not visible from the curb. The assumption that fewer employees means fewer problems ignores the underlying financial obligations and operational hazards that define the business. The real test isn't how many cars pass through in an hour, but how resilient the business is when something goes wrong off camera. Entry into the car wash business begins with a choice: the modest self-serve site or the full-scale express tunnel. A self-serve bay, often a 5-bay setup with coin-operated hardware, carries a starting price tag between $150,000 and $400,000, with some projects reaching $500,000 after factoring in land, construction, and equipment. Equipment alone can account for over $100,000, while land and site work easily double that outlay. Even the most basic build demands a capital commitment that ties up personal savings or investor cash long before the first car is washed. On the other end of the spectrum, the modern express exterior tunnel represents a different level of risk and reward. Development budgets for these high-throughput conveyor sites routinely fall between $2.4 million and $5.6 million. Land acquisition in a high-traffic corridor may cost $500,000 to $2 million. The building shell, wash tunnel pumps, and water reclamation systems add another $2 million or more. Permits, engineering, and utility connections can tack on an extra $300,000 to $600,000. Every line item is essential, none are optional. Financing is the real gatekeeper. Commercial lenders, not owners, set the terms. Most banks and SBA programs require 20% to 30% down, with the rest structured as long-term debt, often 10 to 25 years for real estate, and 5 to 10 years for equipment. Interest rates range from just under 6% for SBA-backed loans to over 10% for conventional equipment financing. Personal guarantees are standard, making the owner directly liable if the business falters. In practice, the capital stack is a web of obligations, equity, senior loans, equipment leases, and sometimes mezzanine debt. The business starts as a financial commitment, not an operating company. Enthusiasm is no substitute for collateral when every dollar is pledged against assets that can be repossessed if revenue falls short. Unlimited wash club memberships have redefined how the modern car wash makes money. Instead of relying on one-off retail visits, operators now push monthly plans priced between $30 and $37. Customers get RFID windshield tags or app-based QR codes that let them breeze through the tunnel and trigger automatic billing. The effect is to turn a local service into a recurring revenue stream, more software subscription than seasonal side hustle. At scale, these memberships aren't just a side benefit, they become the main engine. Mr. Car Wash, the industry's largest chain, reports that about 73% of its system revenue comes from its roughly 2.2 million unlimited wash club members. It's a model built on predictability, with steady monthly drafts, high retention, and real-time usage data feeding into marketing algorithms. The result is a business that looks less like a traditional car wash and more like a SaaS platform wrapped in concrete and steel. This shift hasn't gone unnoticed by Wall Street. In June 2026, Leonard Green and Partners took Mr. Car Wash private in a $3.1 billion all-cash deal, paying $7 per share, a 29% premium over the previous average. That price reflected the value of recurring billing in a sector once known for weather-driven volatility. Private equity now views these chains as cash flow utilities, able to support higher leverage and deliver rapid returns through sale leasebacks and dividend recaps. But the same formula can turn fragile if growth outpaces discipline. Zips, another major operator, chased expansion with floating rate debt and aggressive site additions. When interest rates climbed and competition intensified, the platform's cash cushion vanished. Zips's bankruptcy serves as a caution. Recurring revenue cushions risk, but debt structure and local oversupply can still tip the balance from profit to distress. Every car that rolls through the tunnel draws down resources at a scale most owners never advertise. The numbers begin with water, about 100 gallons per vehicle, even with partial reclamation. For a busy express site, that translates into monthly water and sewer bills of $10,000 to $12,000, a fixed drain on cash flow regardless of how many cars show up in a given week. The machinery behind the scenes is just as relentless. Conveyor chains, the backbone of high-throughput operations, stretch and snap under constant load. A single repair can run $5,000 to $12,000, and downtime means lost revenue on top of parts and labor. High-pressure lines exposed to temperature swings and vibration rupture without warning. Each break adds another $3,000 to $6,000 in emergency repairs. Filtration pumps tasked with separating grit and chemicals from runoff, clog, and overheat, forcing $2,000 to $4,000 in service calls that rarely come at a convenient time. Weather compounds the strain. A 2-week stretch of spring rain can cut traffic by 30% to 40%, leaving expensive equipment idle while fixed bills continue to pile up. The operator becomes a crisis manager, tracking leaks, juggling maintenance schedules, and watching the forecast with a sense of dread rather than anticipation. Compliance adds another layer of risk. Local and federal regulations require strict control of chemical runoff, and violations can trigger penalties from $5,000 to $50,000. One missed inspection or faulty separator can erase months of profit. Each day, the business is less about selling clean cars and more about managing a network of fragile systems, where every failure point has a price tag and every shortcut raises the odds of a costly setback. A disciplined operator can process 100,000 cars in a strong year, generating around $1.2 million in revenue. After covering labor, chemicals, utilities, maintenance, and insurance, the site clears roughly $250,000 in net profit. The numbers look solid, debt service is met, cash reserves grow, and the owner can point to a healthy margin. This is the version of the business that fills investment brochures and online tutorials, a well-run site, steady traffic, and a clear path to profit. The story takes a sharp turn when a corporate chain moves in across the street. Their $1 wash promotion and cut-rate monthly memberships drain away half the volume within months. The independent owner, locked into fixed costs and loan payments, watches revenue drop to $600,000 for the year. In January, a cold snap freezes uninsulated pipes. The high-pressure line bursts, forcing a 10-day shutdown. Repairs cost $30,000, lost revenue adds another $33,000 to the hit. With operating expenses still consuming most of what is left, the year closes with a $50,000 loss. The cash cushion is gone. The owner now faces overdue bills and a lender demanding answers. The spread between these two outcomes, $250,000 in profit versus a $50,000 loss, shows how quickly fortunes can reverse. The business only looks passive from the outside. In reality, every dollar earned is balanced on the edge of market aggression, weather risk, and obligations that do not pause when the tunnel goes dark. In today's market, car wash profits hinge on debt, razor-thin margins, and relentless competition, far from the passive income myth. For every chain scaling through subscriptions, dozens of independents face mounting losses. The real cost isn't just capital, it's risk. Subscribe for more hard looks behind everyday investments.